How much money do you need to trade micro Emini futures? Depends on broker margin requirements. Can be as low as $40 intraday for day trading on S&P ES Emini for S&P 500 EMS micro Emini futures contracts. That's what AMP futures is going on. You'll need to have a very smart strategy though if you're starting with a tiny amount. Even though margins can be as little as $40 Emini micro contract, you'll still need $100 to open the account on AMP. Depends on your broker's requirements. If you're starting tiny, then you'll need to have high accuracy. You'll need super focus. You don't have enough to systems trade at $100, but you can do it. I've started all sorts of different trading accounts with tiny amounts and grew them. But be focused. Don't mix foci. Because if you're half systems trading and half trying to grow a trading account, then you'll could have problems, mental conflicts. The amount of money you need to trade micro Emini futures depends on several factors, including the specific contract you're trading, your broker's margin requirements, and your risk tolerance. However, as a general rule of thumb, you can expect to need between $100 and $1,000 to open a micro Emini futures position. Here's a breakdown of the key factors that will affect your margin requirement. Contract size. Micro Emini futures contracts are 1/10 the size of their full-sized counterparts. This means that you'll need less capital to trade them. What are the margin requirements for micro Emini index futures? Margins are indicative of their Emini counterparts, and the below estimates are based on current market conditions and are subject to change. Broker's margin requirements. Each broker sets its own margin requirements, which can vary depending on the contract you're trading and your account type. Typically, brokers will require a margin of 5-10% of the contract's notional value. Risk tolerance. Your risk tolerance will also play a role in determining how much money you need to trade micro Emini futures. If you have a high risk tolerance, you may be comfortable with a lower margin requirement. However, if you have a low risk tolerance, you may want to use a higher margin requirement to protect your capital. Just go to the broker you're looking at and click on their margins link. Or pester the broker. The broker works for you. If you have a lazy broker, then get rid of them. If they are not doing all they can to help turn you into a winning trader, then they are foolish. Why? Because if you're winning, then you're generating more and more commission for them. You're staying in the game longer. Additional considerations. Trading costs. In addition to margin requirements, you will also need to consider trading costs, such as commissions and exchange fees. These costs can vary depending on your broker and the contract you're trading. Account maintenance fees. Some brokers may charge account maintenance fees which can eat into your profits. Be sure to factor these fees into your calculations when determining how much money you need to trade. Risk management. It's important to have a sound risk management plan in place before you start trading micro Emini futures. This plan should include stop-loss orders to limit your losses and take profit orders to lock in your gains. While you can technically trade micro Emini futures with as little as $40, it's generally recommended to have at least $250 to start. This will give you more flexibility to manage your risk and trade with confidence. Remember, trading involves risk, and you could lose money. It's important to do your research and understand the risks involved before you start trading.